It's time now to get a more detailed look at the economic updates. And for this, I'm joined by our regular commentator, Hong Jin. Good morning, Jin.
Morning.
All right, let's begin with the stock market. Both the Kospi and Kosdaq were off to a strong start this week as governments around the world start to ease some of their lockdown restrictions.
I mean, people are still using cautions, but they are slowly opening. And other Asian markets, including the Nikkei 225, Hong Kong's Hang Seng, and the Shanghai Composite Index were all up yesterday for the same reason. So this morning, they are also off to a strong start. Kospi is up around 11 points or 0.6%. Kosdaq also up by about 0.46%. So this is going to be a short week for the stock market because we have two holidays on Thursday and Friday, which are Buddha's birthday and Labor Day.
Right. And next week, of course, another day off on the Tuesday, of course, Children's Day.
Yeah.
But it will be open on Monday. So I guess we'll see some action then as well. Now, because of the long weekend, the government has been pressuring the National Assembly to pass the supplementary budget before that long weekend kicks off. And we might see that happen as soon as tomorrow.
Yeah, so believe it or not, it could happen. So the ruling Democratic Party and the main opposition United Future Party finally agreed to vote tomorrow on this budget designed to give the relief money to all Koreans. So initially, the Moon administration proposed giving the money to families in the bottom 70% of the income bracket. Now that this has been expanded to offer blanket payouts to all Koreans, the government will have to come up with an additional 4.6 trillion won. So they plan to raise 3.6 trillion by issuing government bonds, which the finance ministry was against, but what the ruling party suggested. The remaining 1 trillion is to be funded through the readjustment of the existing government budget plans. So if the bill passes tomorrow, the government is vowing that everyone will receive their payments before the end of next month. Under the bill, a 4-person household would receive 1 million won, while a 1-person household is to receive 400,000.
Right. So as soon as next month, they can start applying for that and then receive their checks. And just a note also that if people do not request their payments for 3 months, it will automatically be regarded as a donation and then deducted from their tax payments at the end of the year.
That's correct.
Meanwhile, the National Assembly will also discuss ways to set up a stabilization fund to help out some of the key industries that have been hit hard by the pandemic.
Yeah, so this comes after President Moon announced last week a third rescue package to protect businesses from collapsing. So this latest one is worth 40 trillion won, and it's for core industries, which are the backbone of the country's employment that were hit by the pandemic, such as airline, shipping, oil refinery, and auto industries. These funds are meant to help them weather the crisis, and it is on top of that 100 trillion won package, which was announced late March. The president also unveiled an additional job protection plan, spending 10 trillion to cushion the COVID-19 impact on the country's job market, saying the government will play a leading role in creating jobs, adding that more than 500,000 jobs will be offered, many of them for people in their 20s. The government also plans to give 500,000 won each to nearly 1 million freelancers and other workers who are not covered by the state employment insurance for 3 months.
I think that for many people and businesses, that help can't come soon enough. We are continuing to hear how those most vulnerable, the low-income workers, the irregular workers, and those in the service industry continue to be most affected by these job disruptions. And the younger people, too, they are being disproportionately affected as well. It's kind of a pattern that we see around the world. I mean, I think the most severe case that we see in the U.S. with the record number of people applying for unemployment benefits. But the rich, again, getting richer and managing to profit off this. Now, we are also seeing some more disruptions as shown in the economic data. So tell us more about that.
Yeah, so according to an estimate released by the Bank of Korea on Thursday, the Korean economy shrank 1.4% in the first quarter. Actually, this number was slightly better than what most analysts had expected, but still the worst since 2008. So taking a closer look at these numbers, consumer spending declined 6.4% from the prior quarter, while exports decreased 2%. However, the worst may not be over. Finance Minister Hong Nam-gi said the pandemic's shocks to Korea's exports and job market could actually widen in the second quarter. In fact, according to the trade data from the first 20 days of this month, exports plunged nearly 27% from a year ago. And trade is expected to remain under pressure since, much of the world is still under a lockdown.
Right.
And, let's not forget, even before this COVID-19 pandemic, the Korean economy was already grappling with a trade dispute with Japan, as well as declining shipments to China, in part because of the U.S. and China trade war. So things have gotten from bad to worse. And for that reason, some of Korea's future growth prospects are even more troubling. The British consultancy firm Capital Economics forecast the Korean economy will further contract by a whopping 6% in the second quarter. And over the year as a whole, it would shrink by nearly 3%.
And again, those numbers, I guess, will fluctuate depending on how the rest of the world also recovers as well. As the pandemic prolongs and its impact is felt on businesses and trade around the world, it will definitely be felt here as well. And that prediction, by the way, by Capital Economics, 6% contraction in the second quarter and 3% year-wide, that's worse than the IMF prediction that we mentioned earlier this month. That time, the IMF said that the Korean economy will shrink by 1.2% in 2020.
And actually, the Capital Economics number is actually one of the worst. But there are some institutions that have better outlooks for the Korean economy as well.
Good. So tell us about that.
I've been looking so hard for good news, and here we go. Hyundai Research Institute predicts that Korea's economy will contract 0.3% this year, so still in the negative zone, but better. JP Morgan also released its latest estimate for the Korean economy, which is 0%. So no growth, but no contraction either. So this is, as you may remember, the third time that JP Morgan cut its growth forecast for Korea this year. Their first prediction was positive 2.3% in the beginning of this year. Now it's down to 0, but it's still higher than other institutions, most of which predicted a negative growth for Korea. Moody's also provided a glimmer of hope during a conference call with the finance ministry last week, saying Korea will likely be less affected by the COVID-19 pandemic compared to other economies, and that its sovereign rating is expected to remain stable. So in fact, last month, Moody's predicted the Korean economy to grow 0.1% this year. And earlier this month, it maintained its credit rating and outlook for Korea at AA2 and stable, respectively. By the way, AA2 is the third highest level on Moody's rating system, and Korea has maintained that level since 2015. Moreover, Citigroup's chief economist and former chief economist for OECD, Catherine Mann, told Bloomberg that countries that are dependent on manufacturing and tech industries like Korea and Taiwan could see a V-shaped economic recovery, which means the economy would bounce back sharply after a precipitous decline, while countries like Thailand and Singapore that rely on tourism and other service sectors could face L-shaped recoveries. Another slightly better news for Korea, its export of COVID-19 test kits brought in about 130 million US dollars in the first 20 days of April.
Wow.
Yeah, that's actually a 18-fold increase during the same period in March.
So we think that maybe those numbers will continue to go up as well, or at least stay in the strong range there. That V-shaped economic recovery would be very welcome. We would almost given up hope about a V-shaped economic recovery. But as we see more and more countries reopening their economies, whether they've gotten a complete hold on the COVID-19 outbreak or not. We could see that come to light.
Yeah.
Now, let's turn our attention to the global economy, especially as we mentioned in the U.S., the unemployment figures are staggering. And also in some European countries, as they ease restrictions, they're hoping to shore up their economies as well after about a month or so of lockdowns and hoping to breathe some life back into their economies.
Yeah, so there is a monthly economic indicator called the Purchasing Managers Index, called PMI. It is derived from monthly surveys of private sector companies on, how they believe these various conditions affecting their business have changed over the month. And these numbers are pretty painful to watch. So this month's Eurozone composite PMI recorded 13.5, which is down from 29.7 in March, and the worst reading since the survey started in 1998. So the readings below 50 means that activity is shrinking. Also, to put these numbers into perspective, the lowest reading during the global financial crisis a decade ago was 36.2. And as I mentioned before, in April this year, it's 13.5. So you could feel how worse it is compared to that 2008 financial crisis. The U.S. composite PMI reading for the services and manufacturing sectors this month was 27.4, which was also down from 40.9 in March. And on top of that, as we have been mentioning, the U.S. government reported that another 4.5 million Americans filed for unemployment benefits in the third week of April. That's on top of the 22 million who filed in the 4 weeks prior. So we're looking at more than 26 million people out of job right now. So economists now project that the U.S. unemployment rate will rise above 15% this month and continue to rise next month. In fact, the last 5 weeks have marked the most sudden surge in jobless claims since the U.S. Department of Labor started tracking the data in 1967. Right now, more than 16% of the U.S. labor force is suffering from layoffs, furloughs, or even reduced hours.
And by the way, before the pandemic, the jobless rate had been hovering at a 50-year low of 3.5%. So it just goes to show how easily the tides turn. Thank you very much for those updates, Chien. I will see you again next week.
See you next week. Stay safe.